we're gonna hop on with trading with emotions for a little bit.
Yo,
Yo,
what's up, man?
what up, dude? How you doing?
Dude, I'm great, man. How are you, bro? It's
Good.
finally good to talk to you, man.
Yeah, likewise. Likewise. You got some really fucking cool charts going on. I know that.
Dude, appreciate you, man. It's again, bro, like taking from inspiration from you, man. Just like again, shedding light to this whole market corruption
Yeah.
bullshit.
Yeah, it's just ridiculous. I mean, do you remember when everybody thought that the charts were? I don't think people thought they were organic necessarily, but it looked like that there was natural movement to some extent. Like you wouldn't think that there's just, I don't know, two patterns. It's really just one pattern that you just flip upside down, basically. But then, you know, I knew I was seeing something repeating all the time, and I just didn't know how to parse it.
Yeah, no, for sure, man. It's a crazy fucking thing, but again, you know, it's the thing that blows my mind, man, is I think even like bringing this up to the community or people, like I think it's a good way to do it through AMC for sure, and just like GameStop, because it's, you know, the community is interested, I guess, or like this sector, I guess, right? Dissecting the market mechanics and stuff like that is interested in knowing stuff like that. But a lot of people just don't have that faith completely yet.
Right.
And that's the thing. It's like I would love for people to come together and sort of understand what's happening, because there is something happening, you know, and it's real. It's fucking real. And it's like, dude, it's crazy stuff.
Yeah, it's hard to even like quantify literally and mentally what's going on here. I mean, the one problem with the fractal / cycle theory is that you can't quite time movements to the T. But if you can find a concentration of a particular pattern, then you can start to dive into it or pull yourself out of that scale and extrapolate pretty easily. It's just, you know, one big movement concentrated with smaller movements to navigate to there. That's the one hang up that has been an issue for me.
Yeah, no, for sure, man. And again, man, I've been looking at all your stuff, and you've got everything like spot on, dude. I think the man, it's like you said, it's impossible to predict, right, when it's going to happen or what's going to happen, but finding out these like points of interest, right, where you see that volume on that pattern coming in, gives you a good idea with you know, option dates and stuff like that, where something is cyclical, and it gives you a good direction, at least, as to what could happen based off of not only options but the technicals, right, that are lining up. So I truly believe, man, that in the end it's just they're fighting retail to basically second guess themselves on this psychology game. In which technicals will break out or break down and fail, right? It's like we're in this just giant phase of being in a giant flag, a smaller flag. We're in this wedge now, and it's like, dude,
a spring.
Yeah, exactly, man. Spring within a spring, and it's just like, at what point are the technicals going to play out? Because they will, man. They will at some point. It's just figuring out when, right? Because you can, man, so many technicals that you can you know, line up, and that makes sense, right? But at some point, man, it's like, when does it fail, right? Or when does it
Well, that's what that's the beauty of it. Like, I'm afraid that I started the whole TA is useless mantra, and people ran with it. But when I said that back in like July, it was about analyzing TA for trader sentiment, right? Like if you're looking at a resistance or a support, I wouldn't consider that to be, in these two stocks at least, I wouldn't consider that to be some form of psychological influence on the chart, but rather it's just a bunch of algorithms going at it, and these particular points, yes, can become psychological, but I think the market mechanics at play don't permit that. So, you know, the biggest thing is, when you have anywhere from, I want to say 51% to 100% off exchange volume, these are trades taking place that don't have to be reported for up to 24 hours. And that's,
right.
To the point of completion that timer starts. So a lot of these trades are taking place and we don't even know about them yet.
Right,
so
right.
They're constantly ahead of us there. And then when you take that notion and look at the chart and you see things repeating on every scale, it's clear that the majority of the volume is just institutions going back and forth.
Right.
And they know how to target these levels, not because they're targeting psychology necessarily. I think that's just a byproduct, but rather they're targeting particular levels with algorithmic trading. Because that's what this is. It's like the most efficient way to move volume around. Like when you consider what the volume was back in right after January, like everything after that was just dead, right? And that was institutions loading up. You can see Wyckoff all over it. It's all Wyckoff, but the volume died, and then you saw the surge in June, and then volume has been about twice that every day since, and it every level gets filled, every level with millions of shares a day. I mean, that's if you take just a number of 10 million in volume a day and say the price is $10. That's $10 million going back and forth every day, every day. So I would be interested in seeing what the total volume has been, plus the share price at those levels. I'd love to see how much like notionally has been moved since this entire shitstorm started.
Yeah, no, dude, I'm with you, man. I'm with you. Do you think? And just because like I'm now talking to you, man, but are you with the whole idea, right, that there is a larger institution controlling the price action, or do you believe that? Because I think in the community, man, there's the people that believe that hedge funds are controlling the price action, like the short hedge funds are controlling the price action that are not long AMC, and that there's that composite person controlling the price action, larger institution, or that neither of those are correct, and there's no manipulation happening, and this is just purely retail and anybody just trading a stock, right? That's the other.
There's definitely.
What's your take?
Yeah, there's definitely exploits being used by market makers and prime brokers. That's for sure. There's no signature of organic trading on this chart. Like there's zero. This is not what the public would value a company at. Not retail, right? And if retail, per the CEO, owns 80% of the float or whatever the number comes out to, even if it's just over 50%, then there is no way that retail is representing what this chart looks like.
No, I'm with you, man. I love it, man. I love it. I think so. To your point, man, about the whole technical analysis and stuff like that.
Yeah.
If something that I consider to be this whole psychological game that I talk about a lot with how flag, how we were in this giant flag in the beginning, right? Yep. January. Again, we had a similar setup in June, right? Played out obviously different in its structure. And we're sort of playing out this March arc here on a larger scale because of the price, right? And options and how you control the technicals playing out and stuff.
Right.
So with the price moving in that direction and them hedging their positions, sticking, basically closing the price on these expiration dates around the $40 range every single month, or basically every other month is the cycle that I found to be kind of relevant here.
Right.
I believe that the way they will hedge their positions, right, is through gaining that premium once they ramp up the IV in the beginning, right? Yep. As you sell these contracts for, the 145s for like $8 a pop, and then when they're trading at 3 cents the day before, so you sell those, and then a bunch of retail buys them. They short the price enough about 3 weeks before that specific expiration date, which typically on quadruple witching dates, you'll have like a larger, range.
Yep.
So it's just like, it's this game, man. Like at least with retail in that sense, or anybody really going in on these contracts to take as much money as they can and just prolong what is the inevitable, right?
Right.
Just on Tuesday, man, I was looking at the weeklies here. A lot of people do lottos and stuff like that. The $18 contracts went up intraday like 800%. And by the end of the day, man, they were at 45% up. So they fell from 800% to 45% just on that day. Yeah, man, serious, like just, I mean, that's just IV corruption right there, man.
Yeah, I think what they did, so like, okay. On the 25th, I think, of January this year, the market fell all the way down to, like, the SPY hit, I think, 340 in after hours. And what ended up happening was there were a ton of puts that were sell to open, right? So when you short puts, you're bullish. You're naturally pushing the price up because you're using a derivative that is absorbing any negative delta. So there were like $4 trillion of option expiration premium taking place that following day, which naturally pushes the price up because of our beloved Max Payne. So I think what happened is back in June and back in January, I think there were a ton of calls that were written naked. And I think that they were written by institutions and or funds. And when you do that, you get the inverse effect. So if you can save a market by writing a ton of puts, then you could easily do the opposite with calls. And I think that's why you see the price go down like that. That's why the 145s were written, right? You saw those come into play after we broke out at 1450, and we went all the way up to like 2250, I believe, which is nearly 100% gain, by the way, for context. A lot of people just think in terms of linear numbers, but that's as a percentage, almost 100%. And when you saw those 145s come in, that's when the thing started to run even more. But then you had these contracts show up for double what the all-time high was, just coincidentally, right? Like it hit 72, which is 144 if you multiply that by 2, and then your highest strike is 145. Interesting. But if you write a ton of these contracts naked, then you're naturally pushing that price down, because now market makers are incentivized to absorb premium on the put side, which is what Max Payne comes down to, is how do you drain premium and find yourself where everything is the most calm in terms of IV. And after that, you got to make sure those don't go anywhere near in the money, because now you have to hedge for those when originally you were writing them without any hedging. So, and then you look at the chart and you find that time is one of the biggest factors in this. There's so many, like, I love that you scale time frames with each fractal. Like that's something that I don't think many people realize you got to do. If you're going to assume that verticality is going to be consistent, well, you need to retain those proportions. Otherwise, you don't have the correct scaling. It's not proportional. Right. So
yeah, man.
These
amen to that.
These derivatives are able to quantify the value of time via theta and vega. So I think that's ultimately where the answers lie. It's the options chain.
Perfect explanation right there, man.
Thank you.
To that, man. Oof. What is your take right now, man? Just in like your sentiment, I guess, with how you look at AMC, GameStop, stuff like that.
Have you ever dived into like theoretical physics?
So I haven't done specifically like physics. I've done what is the I don't know if you've heard of the fast Fourier transform would be along that range, just because it is something. It's more used in like statistics,
right?
Also physics, but it's something that actually does validate. Similarly, like what the cycle is doing, right? By extracting these frequencies that through low pass and high pass filters, right?
Yeah, I like that. Yep. So for me, what really stuck out was seeing how these similarities, these patterns on the chart play out on smaller time frames and larger time frames, because that means that you have proportions all across the board, which also sync up with Fibonacci ratios. But what stood out to me with that is if you look at like an atom, like these representations of what an atom is to look like. I'm going to fuck up the terminology of it, but at the center you have this mass, and then you'll have components of the atom orbiting around that mass. And it actually looks very similar to that of a galaxy, right? And then if you look at a cluster of galaxies, you'll see that that also looks like the universe. You have all these different things that are of very differing proportions in terms of scale. But when you look at the component of the component, they look very similar, right? So you have atoms composing these structures all around us, and the structures all around us that we live on, planets, look like that of what orbits at the center of an atom. So it's like, okay, well, if this looks like that and that looks like this, then maybe they all behave with some particular attributes.
Yeah.
So that's what this looks like to me. That's what stood out. And when you use that rationale, then you can assume that it's like pixels on a monitor. It doesn't matter what your resolution is; you still have a picture. But the higher the resolution, the more you can zoom in. Yeah,
no, I'm with you, bro. It's telling people basically to try and break away from your traditional layout here, your 2D layout.
Right.
And maybe try and look at things from like a different perspective with what the numbers you have, right? Or breaking away from your traditional TA analysis. And yeah, man, looking at it in that way, like I think physics is probably the best way you can do it. Because it, again, it's getting that inspiration, man, off of all these analogies. But that's a damn good one for sure, man. The whole black hole thing too, man, like how fractals behave sometimes when it gets so near into this black hole, you get stretched along the way, and then you either turn into the other side, flip, whatever, or you dissolve into nothing, right?
Right. So if you want to draw like a 3D square, aka a cube, you draw two squares, and then you draw lines from corner to corner. Could you do that with this? Could you take each of those phases and draw lines from like the top left corner to the top left of the second iteration, and then from the bottom left to the bottom left?
Okay, I think this is it, right? I'm pretty sure. Right?
So.
Am I missing one? Okay, awesome.
Yeah. Basically, if you can visualize what's going on here as three-dimensional, you have some factor that is on the z-axis, and that's what gives you your 3 dimensions. That's your third dimension. As far as quantifying that, I think that is time. That's kind of what I've attributed to over the months. And that's where you have your options become definable, right? Like when you have the thing about options that I don't think people bear too much mind to is that options are the one of either few or if not the only financial instruments that quantify the value of time. That's why when you have like 0-day expiration Tesla calls, right? You can buy them out of the money really cheap, but if they go into the money, then you can basically have the right to 100 shares in value. That is incredibly risky for anyone writing those in theory, because the reason why those values become so exaggerated, where they can be super cheap or super expensive, is because there's only 7.5 hours for them to either go in or out of the money. So it's like if you took a curve and tried pushing it against itself from each side, you form this really, really narrow arc. And then you have a center point sliding, and your y-axis is time. And that's what happens as you have less and less time. And the more time you have, the more money you have. That's why time is money and money is time. But the risk associated with writing those and the opportunity that you get with buying those is respected symmetrically. The only place you can find that that relationship is in options. And when you have things like max pain becoming very evident across every single stock being traded, that means that somebody is valuing this risk and value of time. That's where, when you start coming up with a third dimension for the chart and assigning it to time, that you can start to assume some values. I wish I had an order book for the 145s that were written before our run-up, because I imagine that those came in decadence when we were approaching 72. So I think that if you can find a way to value time as an actual formula, as a function, I think that would be one of the missing components to the chart.
Damn, that's really... No, yeah, you definitely made sense, bro. That's really interesting. What tools would you suggest using, I guess, or have you tried using for finding this like formula?
Basically, to give a simple explanation of it, you have a line chart up, right? Those aren't candles, that's a line, right? And lines are a one-dimensional thing. It's some distance from A to B. If you can find that rate of navigation, aka speed, aka velocity, and find a way to determine the value of what's actually navigating that line, aka the stock, what I did was I just found a way to estimate velocity. How efficient is volume? So I've always attributed these movements of the fractals like ink in a pen. The more ink you have, the more velocity you'll have. But if you run out of ink, or you start to run out of ink, then things are going to start to seize up. And ink is volume. So when we have really low volume, that's either when we're going sideways or things are going slow. Right?
Okay.
So back to the original thought, though. If you can think of this as a car moving on a highway, depending on the speed, aka your total distance traversed when you integrate distance, if you can find a way to appraise the value of your volume and find a way to determine its speed to the highway, right? Like fuel efficiency.
Yeah.
Then if you have 30 miles per gallon and you know that you traveled a mile, then that means you have whatever the reciprocal is of that.
Okay.
So just think of the verticality of the chart as miles per gallon.
Yeah.
And then if you can reverse that to find your efficiency. So when you see verticality going through the roof, like in January and June, that means that you had really low efficiency.
Okay. So then this tool would be incredibly useful for like intraday stuff. Basically, things happening live.
Oh, we've been watching. We've been watching the chart literally play itself out based on the forecast.
Because I do believe, man, if these tools are out there, right? If hedge funds are using this, and right now we're in a sort of stage, right, with all these things that we have accessible to us, I think there's definitely a way to crack the code, because it's not something that they expected, really, right? With this whole meme movement that came out, really has already exposed a lot in the markets, and I don't think they really expected that to happen right now.
Right.
So I think just hopping on that, man, is such a good thing to do, to try and help. Yeah, man, try and help.
Sorry for the word
man.
vomit. Yeah.
Yeah, dude. Wow, that's really, really crazy. Here, man, this is taken from the. So I'm on the 2-hour chart. This frequency is basically scanning based off of the patterns that are happening. It's every 1024 is cycle period here, right? So every 1024 bars, you will see some sort of frequency happen with AMC, right? And it'll keep scanning it, whether it's inverse or identical. And the cool thing here is that it does align with the 62-day cycle. And what it's basically saying is that this portion right here is awfully similar to what happened back here, right?
Right.
Taking this pattern and just flipping it over upside down is basically what this is saying. So we bring this right over here, and you start to see those like movements, right? Like where it's like, dude, what the fuck? Like we actually went down, like we played this whole sequence inverse. What the fuck? And it's just like, bro, if there's a way, right? Again, this is not predicting what is going to happen, but it's a nice tool to understand what could happen, right?
It's
on
a
these
template,
specific dates.
Yeah.
Yeah, it's exactly a template. A good way to put it. Some people are upset sometimes when they look at this because they're like, dude, why didn't we squeeze? And I'm like, this is not going to.
It just means it's part of a bigger version of itself. Yeah.
Right. Exactly. It's like you can change the height ratio, just shrink it down according to these levels, but this is not saying that we're going up like here. This is like misunderstandings.
Yeah. It's just like a what do you call it? It's like if you plugged a guitar into an amp, it's playing the same fucking lick over and over and over and over.
Mm-hmm.
But it's only as evident as how much you turn up the amp. So it's the same lick, but you have to turn up the amp to get the verticality you're looking for. So it just means the amp was turned down at the beginning of it, and then you turned it up. And there's so many different ways you can analogize it.
Spot on. The volume is the most important thing.
Yeah.
For like, seriously. And yeah, man, like this shit is just insane, man. I really hope people hop on just this whole cycle idea, man. With everybody here, man. Like your work, bro, is God work, man. And again, like the only reason anybody is doing this right now for AMC and GameStop. Because of you, brother. And that is just the truth.
Thank you.
That is just the truth, man. Yeah,
thank you.
For sure, man. Any fucking time. Maybe not specifically algorithms, but when corruption gets like unfolded and people find out what's happening, it's like they will hop on something else. And that's my whole concern. Concern is that there will be something else in the future. Like, because the market is ever evolving, right? It's a personality that constantly evolves into something else according to people coming in, the generations that come with it. We're in the technology age right now, right? So things are very specific in the way that the market is handled.
Right.
But like, what's gonna stop them, right, in the future from hopping on something else?
That's the ebb and flow of life. That's what it is. You'll never get rid of it, and you'll never have a period where it ruins everything, like it's the dichotomy of you can't have good without bad, and you can't have bad without good, because if everything was good, then there would be no bad, and if everything was bad, there would be no good. It's the duality of everything around us. The only thing you can do is try to snub it before it becomes out of hand,
right?
You know what I mean? And unfortunately, that's a lot easier said than done. But the more people look, the more we'll find. And the more we find, the more that we can expose.
Awesome, bro. Sounds good, man. Take it easy, bro.
Go sub to TWE, Trading with Emotions.
Hey, thank you.
Yeah, appreciate you, man.
Peace out.
Talk to you later.
You too, brother.
See ya.
Bye-bye.